So, have we seen the turn in rice, soybean oil, and lean hogs? And what is that going to mean? And can we use the Heiken Ashi Smooth indicator to help us with these trend identifications? So, that's what we're going to talk about in this wrap video for the market today, Tuesday, November 11th, 2025. Welcome back to the channel. Futures Brizio here. I am back on camera. And so let's just jump right in. So, as always, make sure you smash that like button, subscribe to the channel. Any questions or comments, leave them down below. And so we'll just jump right in. So let's pretty much, like I said, we're going to spend most of the time here on TradingView. And let's go into rice first. And I mentioned this in the video this morning. This indicator it's on here is a Heiken Ashi Smooth. Now, I'm not going to rehash what Heiken Ashi is. So there's the Heiken Ashi candlesticks, okay, which is this, okay, without just forget about the indicator for a second. We got Heiken Ashi candlesticks, and then we have regular candlesticks right here, okay, and then we have the Heiken Ashi Smooth. What the Heiken Ashi Smooth does, and I need to probably make a video. I think I have made a video on this before. But it essentially takes the Heiken Ashi candlesticks and it basically smooths it out and almost turns it into like a moving average. Okay. Now, I did something a little bit different to it. As I said this morning, first thing I did is I took the wicks off of it because I don't need to see the wicks. So that's why these are blacked out here in the settings. And the other thing, I changed it to a smoothing length of 1. I think it defaults to 10. Which makes it a little bit slower. So basically what I want it to do is I want it to mimic Heiken Ashi candles, which there is no delay in a Heiken Ashi candle. Heiken Ashi candles don't represent the actual true price because it's basically an average, but it does represent the current candle though. So I basically wanted to kind of combine both, have the smoothness and the moving average feel of the Heiken Ashi Smooth, but have it also be kind of more real time with the as a regular Heiken Ashi candle. So that's how I have this indicator set. And you can see you don't need it. I mean, I can turn this off and we can just proceed as normal here. But what I like to use it for is for pullbacks. So if we take this rice chart and we scroll back, we had this huge downtrend. So this is really nice. And obviously this is kind of a perfect world because it was such a perfect downtrend. You don't always get it like this. But if we look at this, so even if we come from here, we have this drop. Let's say this was the beginning of the downtrend, right? This big candle drops, okay, and then price chops. And we can see we have this little pullback. You see the candles turn green, and then boom, it turned red again. Actually turns red here. So you could have gone short anywhere. But let's say here, even you wait for the structure to break somewhere in here and you go short. And then we come all the way down and we have this pullback again, green, green, green. Then we turn red again here. Price comes down a little bit, bounces back, depending where your stop loss was. Hopefully you had it. Little breathing room here. You wouldn't have gotten stopped out on this little retest. Green, green, green. Okay, chops around. And then finally it starts going down. And the nice thing about the Heiken Ashi Smooth is, again, guys, it smooths out these little pullbacks. So if you're coming down here and you get worried that, maybe this is going to be a turn, for some reason you think it's going to go higher from here. Well, you can see the Heiken Ashi Smooth candle stayed red, basically telling you, look, stay in the trade. And even right here, they compress, they tiny little green candles. I mean, this is where you have to just use some experience. Like, these are tiny. You can barely even see them on the chart. Okay. And then you get this pullback. Now, maybe you exit at one of these points. Okay. You were in this trade. You see this turn green. You get out like somewhere over here and protect your profits on the way down. But this is also where I told you that you can use the Heiken Ashi Smooth to help you find the more key levels that you want to look at before the before the market's going to turn. And, so which is basically market structure, meaning you don't really need to get out down here. And even if these turn green, yes, you could get out here and just lock your profits here and then maybe get back in later. That's certainly a viable strategy. If you were in short from anywhere around here, this was still a really nice trade. Even if you get out like you see this candle, like, oh, I don't want to risk giving back my profit. You get out, the market proceeds to go up a little bit. This is only a 1 hour chart, and then it starts in its downtrend again. But you technically wouldn't even have to, because if you look back on the chart, you say, well, where was the last major pullback area? Well, you can use the Heiken Ashi Smooth. You can say it's right here. So this is market structure. This is what I told you about using market structure, right? So we have market structure right here. So this pullback doesn't get anywhere near here. And so, you could use this to say, okay, as long as price stays under here, I'm still bearish in this market. So you can do either way. You can either tighten down your stop loss to a trailing stop, bring your stop, to maybe to here. If you were in this short from here, you move your stop here, in which case you probably would have been stopped out on one of these candles. Or you just, let this thing play out and say, this is just a little pullback and go. And if you did get out over here, or you got stopped out on it using a trailing stop, then you could, of course, re-enter when the Heiken Ashi candles turn red again, which is in here. And again, all this way down, even on all these pullbacks, until we get to here, they're all red candles. Again, we have a couple of really tiny, small green ones mixed in here, no big deal. And then we just proceed down, down, down. Here's the next pullback area. This is like a weird gap on the chart. This must have been some news, or maybe this was this was Sunday. You can see down below here, this is the overnight session on Sunday. You had a big weird price gap. You have to just kind of ignore that. And then, down. And then we get to, the recent price action in the last week or so. And you can see off of this level, we had this big, giant bullish candle. Came up. It did not take out any real structure. Came down. It did technically make a new low, but it rejected quickly off of here and closed back inside this range. And then we just, continue to chop underneath this trend line. Again, hit this area down here. Again, another big bullish rejection. And now we've gone higher and broke above this trend line. Again, I'm not a huge fan of trend lines, but, I wouldn't just place a bet strictly on a trend line break. But you can see the Heiken Ashi candles are getting bigger as this thing goes up, which means the strength of this uptrend is getting stronger. And now, as I said in the video earlier, I expected to see some resistance when we got up to this last trend line touch, which we are. And of course, the market's closed now, so things have stopped moving. But you can see we came right to this and now of chopping around. I would expect to see now some sort of pullback back under here. I don't know how big, but if this is going to be a true bullish breakout, this isn't going to go very far. We might come down a little bit, maybe see like a 50%. Might not even do that. Depends how strong the bulls are. And then if we take this area out, then we're probably going to go higher. And again, I stressed this earlier on rice. Now through January, we are seasonality-wise, we should be experiencing higher prices. Okay, so that's a quick summary on rice, and also just using this Heiken Ashi Smooth. Now, you don't need the indicator. It's a nice little guide to help you find what could be the more important pullback areas and market structure areas that you might not, you might be guessing on if you're just looking at candlesticks. If I turn this off, it doesn't become as obvious, right? Is it in here? Are these, valid pullback areas? To me, I want to see several green candles point, even though there are, there's a couple in here, like right in here. It's really hard to see them. I still don't consider that. I just consider that part of the overall trend of this move down, right? So you can use it to find these more valid structure pullback areas, okay? And so now we can just use, we just see here the price looks different, right? It's no longer just trending down, 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 down. We're now running into a phase here where we have price is not able to break to new lows. You can easily put a horizontal line at the bottom here, multiple touches on this area, and then a break above the trend line. Okay, Heiken Ashi Smooth turning upwards. I wouldn't say it's 100% confirmed yet, but there's something different about this whole area here versus what we've seen over the last couple of months. Okay, and so I expect to see price continue to go higher. That's my guess. We'll see if that plays out. Make your own trading decisions, right? All right, so that's rice, and we had a long, which I decided to close earlier on crude oil, and again, zoom out a little bit on crude oil. Again, here's our Heiken Ashi Smooth on the 4-hour. We had this big bullish move back at the very end of October. Well, the 21st, so the last 10 days of October. And then we kind of chopped around. And again, guys, this is just simple price action. You know, this is an impulsive move. This is kind of overlapping waves, right? Down, up, down, with everything kind of overlapping. This is more corrective. But we had this big solid move up, bullish move up, took out a lot of structure, a lot of green Heiken Ashi candles. And then when price started going back down, you see how it just kind of drifted. The Heiken Ashi was almost acting like a moving average, just more sideways here, right? Not really doing a lot. And then today, boom, we break a trend line. Again, not exactly any magic to the trend line, and I would expect some pullback. But you can see we've got above the trend line. So what do we see now? You know, maybe we see a pullback towards the trend line. We got lows sitting in here. Maybe we don't even get that far. If the bullish momentum is going to come in, we may not even pull back that much. And then you see price go higher. All right. And so, you know, and the more we zoom out on the chart, here's the 8-hour. You can see very bullish, you know, impulsive, taking out little market structures. These are not major market structures. In fact, this is the major market structure, in my opinion. And you came up when we tagged it, but when we started coming back down again, we had a little bearish momentum, but overall, this just kind of, you know, drifted lower. And look how long it took it to go from here to here, all these candles, right? As opposed to how few candles it took to make this move up. So to me, this almost looks like, and I think I made this point before, an Elliott wave ABC pattern. For those of you, and I haven't really done anything with Elliott wave, but a corrective move in an Elliott wave, is impulsive, finish of a trend, and then an ABC, and then price breaks out. Is that what we're seeing? Well, if we get any follow through, then yeah, I would say that's definitely what we're seeing here. If we get follow through, and again, if we want to look at recent market structure break, you can see, on a trend line, what I like to do is look at the last touch of the trend line. So it's right there. We didn't quite come up there today, but again, any break above this level to me would definitely confirm the uptrend. So but obviously the more conservative trade would be to just play it on a pullback and then a bounce, because then your stop loss would have to be less. Where if you play the breakout, there's a chance that by the time it gets through this breakout area that it's going to then pull back. So you can do it either way, but either way, crude oil looks to be, looks to have bottomed out way back here, and maybe we're looking at an uptrending market starting. So my bias on crude oil is neutral to bullish. My bias on rice is becoming more bullish, especially if we're able to take out this little structure level. Probably bullish, maybe slightly neutral. Crude oil again, again, as long as if we get through this box right here, which we're trading inside of now, if we pop through here, I would expect prices to go higher. Okay. All right, soybeans. We zoom out a little bit on soybeans. We did have this big pullback, but price is still struggling to kind of go higher. We tried today. We just kind of came up here, and it's just not looking all that strong right now. Okay, we came off this low, tried to go higher. This is really our key structure because we haven't made a new high off of this low yet. That's why I have both of these yellow lines here. I talked about that earlier. The Heiken Ashi Smooth certainly called out this big uptrend. And then this looked like to be like a pullback. And then it started to go up again. Looked like maybe the uptrend was going to resume. So, but you can see it's kind of rounding out. This is the 4 hour chart, and it's having a hard time making any progress here. So I'm a little bit neutral on soybeans right now. Now, maybe this is going to be another aspect of another like ABC correction. Maybe that's what we're seeing here, right? Here's the A. Again, this is an Elliott wave without going into, but a corrective pattern is what they call a zigzag pattern. So here's a move down would be considered an A, then the B. If this rolls over and goes down again, would probably would be the same length as this A wave. So let's say it came down here or something, and then maybe at that point we get another move back up. All right, if that's what plays out. If these highs hold right here, and we fail to go up here and make a new high, and this thing rolls over, then I think, at least in the short term, we're probably going to see some downside pressure on this. Okay. But either way, I'm neutral on this right now. Again, if we get some bearish price action here, especially if we take out that we had this little liquidity where again it tried to sweep and then go higher, it failed again. We get back down below here. This is the 1 hour chart. Then I think we'll at least go back to where this A wave ended. Okay, this A, then this would be our B, and then down for C, and then potentially the resumption of the uptrend potentially. Okay, so any break below here, I would consider that to be a move to the downside to potentially complete a corrective pattern. That would be a short-term target. Now, obviously, if it keeps going lower after that, and we start to, and especially if we take out this 4 hour level down here, price goes way down, we take this out, that would, to me, would probably constitute a trend reversal. But we're nowhere near that right now. So a short-term target would be a completion of a corrective pattern and then a move back up. All right. So that's soybeans. Soy oil, again, it's kind of similar to rice, right? We were trending down here. Obviously not as clean as the rice chart. But, again, move down. This is the 4 hour chart. We had this bottom, and I showed you guys this earlier. Okay. Let me try the 12-hour chart. All right. 12-hour chart. And, we came down here. You can look left here. You can see this has kind of been an area of previous support and resistance. If we look all the way across this from this low that was put in, we move across support, support, resistance, 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 resistance. So there's something about this, 48 to 48.50 area is the market's really interested in. And you don't get too caught up in past levels because they are in the past. But it is something to look at, especially when you see, a bullish bounce. On the 4 hour chart, we made this low, and then we had this big bullish candle up here. Price came back up, created essentially a new trend line touch, failed to put in a new low. So we call this a higher low, and then broke through. All right. So much like what we see with rice and crude oil, soybean oil is kind of the same. So I look at this trend line now. I'm like, okay, where's the next logical hit on this trend line that we would need to break? And we basically took out this one, but we're sitting basically at this one right here. But really anything above, if we get back above here, and this is a 4 hour chart, we get above this resistance zone. This is like a retail, I call this like a retail resistance zone because retail traders will try to sell off of here. All right. And these are like, let me see here. I'm trying to find my line. There it is. This is a retail zone here where price has made multiple attempts to pop through here. Okay. But generally what happens for retail traders will try to sell off of here, but price will fail and then end up going right through it, especially after like the third touch. All right. So that's what I'm looking at soybean oil to see this thing continue to go higher. All right. If we get through this zone. And again, we don't quite have seasonality on our side with soybean oil, but we're a little bit early. But we'll see. Again, seasonality is nice to have, but it's not a need to have. and hopefully we'll get COT data back and see where the big traders are. And once we get the COT data back, guys, I will make a video and kind of bring us up to speed on all these markets from a COT standpoint, okay? Match it back up with the seasonality and see if we can figure anything out. But we don't have any of that right now, so there's no point talking about COT. We only have price action and seasonality to go by. All right. But again, soybean oil is looking a lot like crude oil and rice. And we'll just see if we get any follow through here. All right. Canadian dollar. Also, I had a trade in this today, which I closed at the end of the day. Again, not to beat a dead horse here on Elliott wave, but this to me looks like a potential 5-wave Elliott wave pattern completed here, right? Basically a 1, 2, 3, 4, 5, 3 being a big long wave. All right. So if that's the case, then what you expect to see now is some sort of pullback here. So maybe we come back down towards, this low, this previous low here. We go to a shorter time frame. Okay. Maybe we go lower than that. Maybe we, if we put in an ABC, we do it in A, B, and then C. We'll see. But either way, the bottom line is it looks like we've potentially turned the corner on Canadian dollar futures that will go higher here too. I just expect another pullback here before we go higher. What that pullback looks like, I don't know. And then again, a short-term target would be back up here at this longer time frame zone that's sitting up here. Okay. And my chart is frozen. It's not updating here. Let me try to go click back into it. All right, well, we'll go back to that. Because for some reason I can't get the higher time frame chart. Now, soybean meal, much like what I was talking about with soybeans, that potentially we're entering into a corrective phase. Soybean meal is essentially the same as soybeans. All right, so I'm not going to spend a lot of time on it. Again, we had a structured trend break right here, right? Price came down, up, broke through with impulsive bearish price action here. All right, so if we're not able to break this high, okay, which it tried to make today, if this continues to fail, and especially if we get below this little 1 hour zone, right, where prices now tried to run up, came back, bullish candle off of here. But if this fails and we break through here, then probably what we're going to see is much like what I was showing you on soybeans, where we'll see a probably more of like some sort of corrective pattern here, ABC, right? Whoops, just drew that wrong. Right, where we come down and then up and then down again. Fix this one, something like that, right? Now, generally, again, I'm not going to make this a lesson on Elliott wave, but a good rule of thumb is that the A wave and the C wave are usually about the same length, but not always. So this one is about 153 points. Okay, I know if you look at this, that takes us, just about where I drew it, maybe a little bit lower. Takes us to basically here, which is also, a previous pullback area. If you just look a little bit here. So is this what we're going to see? I don't know. But like I said, if we don't come up and take out this high right here to move higher, then this is probably going to roll over. If this doesn't break this high, and especially if it doesn't break the high and then takes out this little minor level here on soybean meal, I would expect a move down, at least a corrective move. It doesn't mean we're in a reversal. I think we got a long way to go for reversal. We still are seasonally in an uptrend in soybeans in the soy complex. And so I would expect that to continue. Okay. All right. Corn. Not going to spend a lot of time on corn. It is looks like I mean, it's basically it's ranging inside of this 4 hour zone, right? It did hit the low of the range today or yesterday, and then we had this impulse move up. But again, I mean, this could just potentially just go right back to the top of this range, and then we turn around and we go down again, you know, uh, and come back down. I don't know. So I just don't like trading ranges like this. I want to wait for a breakout and a trending phase. But depending how you like to trade, there is something to be said that the market's going to turn and rotate, off one of these lows, and that would continue the uptrend that we had started previously. All right, we had this uptrend here previously, and now we've been in this consolidation phase in between these two yellow lines. Right, we've basically been stuck inside of here since the end of October. If you take a horizontal line, about cut this in half approximately, right, then this is potentially a buying area off of here. But the question is it just going to go to the top of this range and stop, or are we going to actually break through? Personally, I would just like to see it break through and then, come back, retest the line, and then go higher. For this little bit in between here, it's just not my thing. But other people might look at this and say, this is a great buying opportunity. It's low risk. You put your stop below this bullish candle and you just let it go. And if nothing else, you get back up here and lock in profits at the top of the range, because there's definitely going to be a reaction. It's just a matter of whether it turns and comes back down, or if it chops and then breaks through. Another one of these like retail resistance areas. All right, so all kind of depends on your point of view. I'm not sure what it's going to do, but I would like to just wait and see if we get some follow through and break out of this range. And then that would be something I'd be interested in joining the trend. Okay. All right. And then lastly on Hogs. Hogs today tried to break higher. Well, I mean, it did technically yesterday. We had this big, strong bullish candle. And then today it tried to go higher. It really didn't make any progress. I did take a long on this, which I closed for a loss because I just didn't like the way it was looking. So I'm out of that now, and it probably because I need to let this pull back a little bit more. I do still think that we will move higher, just because, this is such an obvious break from this downtrend. Okay, it's just, and again, if we look left, we can see, and I mentioned this in this morning's video, we have this area right here where price rejected off. We came all the way back down to it, and then came off of there with a big, strong bullish candle. So a price action standpoint, this looks pretty bullish. We have a break of this trend line, of this Heiken Ashi Smooth, all these down candles. All right, and this is just telling you to stay in this trend. Now they're starting to turn green with a bullish candle on that breakout. So a little bit of pullback here. Expect, to see price come back down a little bit, and then potentially, go back up. Okay, so and turn the page on the downtrend. And again, from a standpoint of COT, now through mid-February, technically, we have seasonality on our side. So we have seasonality on our side in all these markets right now, except for soybean oil, and that's more of a technicality. Because we will pick soybean oil seasonality back up in mid-December. So, how much of a, pause will the seasonality take between mid-November and mid-December? I just go by what the seasonality chart shows, and it just shows a little flattening of the seasonality through these few weeks in between mid-November and mid-December. So that's why I separated it. But, you could just consider it to be one giant seasonal move from October through February, which is, kind of what we see with soybean, meal, and soybeans. So I just technically split this up a little bit, but it doesn't mean that it's going to go back down. in between those two time periods. All right. So yeah, like I said at the beginning, guys, could be seeing a turn in hogs, in rice, and we can actually add crude oil and Canadian dollar to that list. Okay, in terms of breaking their previous trends. Okay, Canadian dollar I think is well underway. I think and hogs, rice, and crude oil still have some proving to do, but they're starting to look more bullish for sure. Kind of just got the first leg of the three of those markets, the first real impulsive leg up on those, whereas Canadian dollar, like I said, is already looks like it's already started doing that in the last week or so. All right, so we're gonna see what happens, and then for like I said, the soy complex, we're gonna for soybeans and soybean meal, we're gonna potentially look for some corrective price action, and then maybe a return to the uptrends. And corn, we're gonna wait for, from me anyways, a breakout out of that congestion area on the 4-hour chart. All right. So yeah, so that's it, guys. Just again, just wanted to do a little market wrap and just tell you where we're at here. And again, guys, the Heiken Ashi Smooth is a really cool indicator. You don't need it, but like I said, it helps. I think the two things it helps you with are, one, once you're in a trade, it gives you confidence to stay with it. Okay, because all in here, when you see these bull candles form, like this one especially, these candles stay red. Okay, and you can see the price action, right? And you can be confident that these are staying red. Price hasn't broken through them or anything. You can just hold this all the way down. And, here, there is a green candle. It's hard to see it under this blue candle. But, this is one of those things where it busts through here that, by the time you see this and you get out, hopefully you'd been locked in some profits from up here. But that's where, on this, if you had gone out to a higher time frame and seen that it was coming into a major area of previous support where it bounced, this would have been an area you were looking to exit this trade anyways, and that would have been perfect. You would have picked the bottom on that perfectly. All right. But that's the benefit to Heiken Ashi Smooth. And like I said, I just took the wicks off and I made this, I put the smoothing length to 1 just to make it as closely mimic the actual candlesticks and what a regular Heiken Ashi chart would show. I think you can move it to, I don't know what happens if you move this to 0. It doesn't really change it. But I think the default is 10. So if we change this to 10, you can see what it does here. It makes it it makes it really smooth, but you can see it's very, very, very late calling the turns. Look at this. Like, these candles are still red, even though we have this big bullish. This, that's just not right. And then over here, it doesn't turn red until price is way down here. All right. So that's why I think the default settings are way, way too slow. So if you go to 1, it makes it much more like an actual Heiken Ashi and like a short-term moving average. But it also shows you when you can stay in, be confident to stay in the trade. And it's pretty good at picking when you should get out too. Okay. Without too much delay here. All right. And the other thing is, in this, you can play around with the moving average types. Okay. You can sit here and click through all these. You're going to find at the end of the day, they don't really make all that much difference. It's just the way they're calculated. I don't know where it went. That's weird. I changed it to this HMA, which I assume is a whole moving average, and it just went away altogether. So, yeah, like I said, you can see I'm changing these around. It doesn't really make all that much difference, guys. So I would just, leave it at EMA. If you want to play around with it, you can. If you want to use the indicator at all, okay? You don't necessarily need it. But again, it's good at, helping you stay in a trade you're already in. And it also, I didn't finish my thought before, it also helps show you more important pullback areas to think about either entering, to look at for an entry, or to tighten up stop losses, because instead of having all this noise in here, well, it's telling you that right here with these red candles that this is a good pullback area, which again, you don't necessarily need the indicator to show you, but because you got these big wicks, but it's just a nice visual, right? And that's what I like about it. All in here, it's telling you stay in, stay in, stay in. And then right here, it's telling you, okay, something's going on here. Maybe you want to either exit or tighten up your take profit or your trailing stop, and then, or get out and then get back in when it turns green again, whatever. So those are the two advantages to moving average to the, to the smooth Heiken Ashi. All right. All right, guys, so I'm going to leave it there. I hope that was helpful, and we'll keep an eye on this, but those are the few markets I'm really curious to see if there's follow through on. Again, rice, crude oil, hogs, Canadian dollar for continuation, and then for soybean meal, and corn after a corrective period to see if we resume our uptrends. Okay. So, so that's it. And like I said, once we have COT data back, whenever that comes back, once the U.S. government reopens for sure, we'll see how quickly they update the COT data. I'll be keeping an eye on the COT site to see if they update it. Once they do, then I think I'll probably take all of this data and make a video on and just bring you up to date on the COT positioning for all of these markets, and we'll spend a video just doing that. Okay? All right, so I'm going to leave it there, guys. Have a great rest of your night. Make sure you smash that like video, subscribe to the channel, leave questions or comments down below, and we will catch you tomorrow. All right, have a great night, guys.